Hey traders, in today's video, I'm going to be going over the 7 deadly trading habits that you should avoid at all costs. And if you're doing even one of these habits, then you're on your way to slowly ending up blowing your account. And the reality is, most of you might not even be realizing that you're doing these bad habits because you just aren't aware of them. And in today's video, I'm going to go over every single one of these bad habits and show you how to avoid these. So if you like the sound of that, I just ask you for one favor, go ahead and hit the like button at the bottom of the video. And if you aren't subscribed, go ahead and subscribe to the channel. And for those of you that are subscribed, welcome back. Let's go ahead and get started. Deadly habit number 1 that brand new traders have is trading with a static lot size. This is something that you should absolutely not do. And what I mean by this is, I know a lot of traders that when they're trading, they trade with a very specific one single lot size and they don't ever change it with any of their trades. I'll give you an example. I see a lot of traders that say, hey man, I just trade with one lot for all my trades. And most traders don't realize that when you're trading one standard lot, or when you're putting a 1.00 in MetaTrader 4 on your app, most people don't realize that you're actually trading 100,000 units of that currency. You're pretty much trading $100,000 of that specific currency. And with that being the case, what you're actually doing is you're either making or losing $10 per pip. Every single pip increment the price moves in your favor or against you, you're making or losing $10 per pip. So for example, if you have a 10 pip stop loss and the price ends up going against you by those 10 pips and the price hits your stop loss, $10 times 10 pips, how much money did you end up losing on that trade? You ended up losing $100. And then that same trader goes into another trade, let's say the next day, and this time they have their stop loss at 20 pips. So, and they still do that one standard lot size, and they're losing $10 per pip, but this time the stop loss is 20 pips, and if you get that trade wrong, now they just lost $200 on that specific trade. Notice with both of these different trades, they're risking a different amount of money per trade without having an idea of why they should be risking more or less for that trade. So what you should do instead, you should take a look at your stop loss. You should take a look at the distance of your stop loss and calculate what your lot size should be based on the amount of money that you do want to risk. So to give you that specific example, if you wanted to risk $100 on the trade, and if you had a 20 pip stop loss, in that case, you would want to trade a half of a lot, because if it moves 20 pips against you at $5 per pip, $5 per pip times 20 pips, that gives you a $100 loss. And the reality is, all your trades should have various different stop loss distances based on technicals that you're looking at the chart, which brings me to deadly habit number 2. And this deadly habit is not having a specific trading plan. And to explain what I mean is, whenever someone enters a trade, most people, they don't have an idea of where they even want to put their stop loss, or they don't have an idea of where they even want to put their take profit. They just literally open up their MetaTrader 4 app on their phone. They just hit buy whenever they think is a good idea to buy. And they don't have a predetermined stop loss or take profit. They end up just saying, I'm just going to go with the flow. I'm just going to enter when I think it's a good idea to enter. And they convince themselves that they're going to end up exiting the trade at a specific point where they think the price is good enough for them to exit. But what ends up happening is, and I know this from experience, when you're looking at your phone and if the price is in profit, you're not going to convince yourself to get out. What your mind's going to do is your mind is going to try to convince you to continue to stay in that trade, because if you see you're getting in profit, the greed factor will kick in and you would want more profits to continue to come, because if you're at $400, $500 in profit, you obviously would want more. And what's going to end up happening is, if you don't have a specific take profit already set, you're going to keep staring at your phone. And when you are going to exit your trade is when those profits end up going down and down and down and down and down until the pain of that loss is great enough for you to actually hit the button and actually close that trade. So to avoid any of these emotional decisions that you have to make, and we as humans are very emotional based creatures, so to avoid all these emotions, you need to already have a predetermined take profit based on your specific rules and your trading strategy. Some specific strategies are where every $1 I'm looking to risk, I'm looking to just gain 1.5 times the amount of money that I'm looking to risk. So for example, if you're willing to risk $100, you have your take profit automatically set to $150 profit, and you're going to close the trade no matter what. That's one way you can kind of do your take profit without having any emotions involved in your trading. Another way, other people look at various different technical factors. They look at price action, and they already have a predetermined area where they feel the price might come back down, and they want to have their profit already set before they even enter their trade. Those are a couple ways that you're able to have a take profit set before you actually jump into the trade itself. So if you have your stop loss and your take profit already set, you don't have to make any emotional decisions while that trading is running. Because I know a lot of people that say, hey man, the price is going to go up. It's going to continue to go up. It's going to go up. And it's like, no, Robert, it goes down.
Walking on fighting side of me.
Robert, that don't look like it. It goes down.
It don't. It don't go down.
Robert, it goes down.
No, it don't.
It do go down.
Oh!
Which brings me to deadly habit number 3. And this is chasing trades. This is a very bad habit to get into, but it's inevitable for most brand new traders. Most brand new traders are literally just sitting there staring at the charts, and if they see the price has moved a few pips and they were just hovering their thumb over the buy button, but they didn't take action, and because they were just a little bit hesitant, and if they see the candle is now very bullish, it's a huge green candle going up, they end up convincing themselves, okay, this is the best time to enter because I'm getting FOMO and I don't want the price to continue to go without me. So they end up entering the trade. And for those of you that have been trading before, you guys already know what's going to happen next. As soon as you hit the buy button, you're going to see a huge red candle going straight down, where when you enter that trade, your profit is now all the way straight in negative. And it's like you're thinking to yourself, damn, it's like the market was watching me. It's like the market knew exactly when I was going to hit buy, and now it's completely going against me. And the reality is, whenever you have that gut feeling of wanting to buy into a trade or enter now whenever it's too late, that's usually the worst time to actually enter into a trade, because the price more than likely than not will definitely go against you, because you're not the only retail trader thinking about entering at that specific time. Many retail traders have that same type of mindset, and guess what the market makers and institutions do? It's very easy money for them to take off of their retail traders, so they bring the price the other way. So do not just simply go with your gut feeling whenever you're thinking about entering a trade. Always make sure you have a very specific reason to enter the trade itself. Now, deadly trading habit number 4. This is super, super, super crucial. Most brand new traders, and I talk to traders all the time, and they always tell me, hey man, I'm just looking to gain 50 pips a day. I'm looking to gain 20 pips a day, 100 pips a day, or even like 20% gain on my account every single day. And that's not realistic. You cannot expect to have consistent daily profits every single day like a job. That's what most people don't really quite comprehend, because most people come from a job background where they're used to getting paid $10 an hour, $15 an hour, $25 an hour, which is consistent pay. So I understand why people's mindset is like that. But when it comes to trading, this is a business. This is completely different than the traditional 9-to-5 work life. There are going to be days where you can only make maybe 10 pips. Maybe some days you end up even breaking even. You make $0 profit. There are some days you might even end up with a loss, and that's completely fine. This is a business. This is trading, and you have to accept your losses. But if you give yourself a daily goal of catching 100 pips per day, and if you do not reach that goal by the end of the day, you're going to end up making sloppy decisions, just entering trades, just chasing those final bit of pips until you reach your goal. And what's going to happen is you're going to start making unwise decisions where if you were in 50 pips profit for that day and your goal was 100, these unwise decisions are going to bring that 50 pips profit down to only 20 pips, down to 10 pips, down to 0 pips. And you might even end up in the day losing money at the end of the day. And at that point, what's going to happen is you're going to get into a mode, what's called revenge trading. And for those of you who've been trading for a while, you know exactly what I'm talking about. It's whenever you lose a trade, you get mad at the market and you don't want to accept your loss. So you're going to say, you know what? I'm going to pull a fast one on the market. I'm going to go ahead and enter a trade, maybe double the size, and I'm going to make my money back back because I ain't going to let the market win against me. And what ends up happening is the market is very quick to chew you up and spit you out. So you should not have daily pip targets. That's a very newbie thing to do. Don't do it. Now, deadly habit number 5, and this is literally sitting at the chart and staring at your charts. Whether you're in a trade, whether you're not in a trade, most people just love to stare at the charts just because they think they'll find an opportunity randomly in the market. It doesn't work like that. If you're just staring at the markets, just waiting for something to happen, that's not having a specific trading strategy, because that is not a repeatable strategy that you can constantly repeat. Staring at the chart when you're not in the trade, what you're going to end up doing is you're going to end up chasing trades which are not as clean without having a thought out process of what your trade should be. And when you're in the trade, it's even worse to stare at your charts, because if you're in the trade and you're looking at your profits, you see the dollar signs, they're either in the red or they're in the blue in the profit, and you're looking at the charts going up or down. And especially if you're in the 1 minute or 5 minute time frame, you see the candles are moving all the way up, all the way down, and you start making very emotional decisions. So what you want to do whenever you're in a trade, you want to have a predetermined stop loss and a take profit, and you literally want to close your laptop, turn off your phone, go do something else. Live your life. Allow the trade to do what it was going to do, because you staring at the chart is not going to adjust or affect the market. You don't have magical powers where you're going to make the candle continue to go up or down. So save yourself that stress, save yourself these emotional decisions that you'll end up making, and just literally go do something else with your life. Now, deadly habit number 6, and this is not recording your trades and analyzing your data. A lot of people just enter 5, 6, 7, 10 trades per day, and then 2 days later, they have no recollection of what trades they even entered 2 days ago. They have no idea. They just entered on a whim. They just enter and they completely forget about it. They're not understanding or analyzing why they entered the trade, why they got the trade wrong. They don't even remember the trade even occurring. And do you think this is a way a professional would trade? Do you think someone with a 7-figure account, a multi-million-dollar account, would trade this way? Absolutely not. Even if you don't have $1 million account, why would you not act as if you did have $1 million account? It's not like you make $1 million and then you act that way. No, you need to act as if you had $1 million in your account first. If you treat your account that way, that's the only way that your account will grow to that type of level. Because the reality is, the industry standard is journaling your trades, marking every single trade down, and at the end of the week, reviewing every single one of your trades. You need to look at every single one of your trades and ask yourself, why do you think that trade was wrong? Why do you think that trade was right? Because if you just enter a trade and you forget about it the next 4, 5, 6 hours, or maybe the next 4 or 5 days, and you don't even remember why you entered the trade, that's not a very repeatable process or even a strategy that you're even working on. Most people need to get out of that I'm doing this trading as a little hobby mindset, and then they need to rather get into the, all right, I'm going to take this seriously. I'm going to make sure that I'm spending my time in this. I don't want to waste my time, and I want to make sure I'm doing this the right way. Because if you have that type of mentality, the mentality of I'm going to make sure I'm doing this right, doing this as a professional, making sure I spend my time wisely, you're going to get those type of professional results. So I can only encourage you to make an actual trading journal, track all your stuff, and literally ask yourself why you think you got those trades wrong and why you got those trades right. Now, deadly habit number 7. This is super, super crucial. Remember, guys, the whole point of trading is to create yourself a strategy where you know in the long run, you will know that at the end of every month, you're going to be profiting. You're going to be making money. Your expectancy is positive. You have a positive expectancy. And the only way you can truly test your strategy is to not deviate from the plan at all. Zero deviation, meaning if you are entering with very specific rules, you can never, not once, you can never make a decision that goes outside of your rule. Because if in a course of 100 trades, you make 4, 5, 6 small little adjustments out of those 100 trades, and those 5, 6 small little adjustments that you made cause your profitable strategy to end up not being profitable, you would never know whether you had a winning strategy or not. Because those 5, 6 trades that you meddled in, that you had a small little emotional decision in that you actually jumped the gun and did something with, those 5-6 trades could have been your big winners, where those trades could have netted you maybe 4% gain on your account, 6% gain on your account. And those small little 4%, 6% gains for 4, 5, 6 trades, those definitely add up. Whereas without those trades, maybe your account was break even, or maybe your account was even in a loss. So you do not ever want to deviate from your strategy. You want to make sure that you're consistent with it, because as long as you can be disciplined enough to stick with your rules, you'll know at the end of the month, you'll always have a consistent strategy that's always netting you profits, and you'll know you'll never ever have to worry about money ever again. And once you can get to that point, once you can get to a point where you know you're always profiting no matter what, even if it's 2% gain per month, 5% gain per month, 10% gain per month, 20% gain per month, whatever it is, as long as you know that you always have a positive expectancy, then you really only have one more final step to do in your Forex career. And what is that? That is literally just growing your account. And there's many ways to do that. Find a job, get more hours, deposit more money into the account, or just slowly grind it out, slowly start building your account little by little by little, or figure out a way to add more money to your account. Because once you know that you're always profitable, you just grow your account to a size when you're happy with the monthly profits. And at that point is when you will become financially free. And those are the 7 deadly trading habits that you should avoid. So if you guys got some value in this video, please drop a like. It really encourages me to make more of these videos, give you a lot more free, consistent value to provide all this information to you guys. And if you aren't subscribed, I would definitely appreciate you subscribing to the channel. It's completely free. It doesn't cost you anything. And this way you'll get notified. Once you hit the notification bell, you'll get notified whenever I do upload videos in the future. I hope you guys got some value. I appreciate every single one of you. Trade safe, guys, and I'll catch you guys in the next video.